Hello and welcome to the Quantitas Capital Audio Webcast. To receive a copy of today's slides or notice of future webcasts, please contact info@quantitascapital.com. And now a general disclaimer. With that, I would like to turn over the call to Mr. Matthew Carr, President and CEO of Quantitas Capital.
Thank you, and thanks everyone for listening into our webcast today. I'd like to begin by providing a general market update for the year. And on the chart now, you see year-to-date performance for a set of asset classes representing how the markets are doing this year. On top, you see returning nearly 4%, Liberty Broadband, and we'll be discussing that in more detail later today. Below that, you see the S&P 500 has returned about 1.25%. The Dow Jones Industrial's down on the year, down about 0.25%. The aggregate bond index, representing around $41 trillion of domestic bonds, is down 1.25%, and TIPS, inflation-protected bonds, are down about 0.75%. So all in all, 2015 has been a relatively flat to negative year for the broad asset market. Next, we will discuss what we believe to be a fantastic opportunity. At Quantitas Capital, we like to think thematically about our investments. We undertake independent market research and take positions that we believe will create long-term shareholder value for ourselves and our clients. And sometimes the process of searching for investments is somewhat akin to surfing. You're waiting for a wave, and once you identify a wave, you hop on it and you ride it, preferably safely. And upon its completion, you exit. The wave that we have identified and are currently riding is a wave of cable and broadband consolidation. We believe that this wave will have profound consequences for investors. And this is a wave that we've seen before. In the 1990s, there was a wave of cable consolidation driven by competition from the large broadcast networks. Cable company shareholders benefited tremendously from this consolidation. Today, we see a similar wave. Again, we see consolidation of cable and broadband companies. And there are two external drivers that I would like to discuss. First, with respect to the cable side of the business, there are the content providers. Content providers are a constant source of increasing costs for cable companies as they seek higher payments for sports and popular shows. These are the Viacoms and the Disneys of the world. Secondly, there are the over-the-top video providers. These are the Netflix, Amazon Primes, and Hulus of the world. The over-the-top providers compete directly with cable television, yet they catalyze demand for broadband. Consumers increasingly turn to over-the-top providers to watch video over the internet, and the more video they watch, the more bandwidth they need. The cable companies have the fastest internet speeds available. It's important to remember that as the number of cable television subscribers dwindle, broadband becomes increasingly central to cable company business models. The cable, the physical line that provides broadband to your home, will be the most valuable pipe, but not because of cable television. This brings me to the topic of today's presentation, Liberty Broadband. We have owned Liberty Broadband since it was created via a spin-off from Liberty Media on November 4th of last year. So let's talk about the company's management. On the slide now, you see a picture of John Malone, known in the industry as the cable cowboy. Malone shaped the cable industry in the 70s and 80s, and along the way he built the largest cable company in the nation, TCI. The bottom line is that Malone is a proven steward of shareholder value, and shareholders fared very well under Malone. A dollar invested in TCI in 1973 was worth $901 in 1998. Now let's talk about the current transaction that Liberty Broadband is involved in. On May 26, a deal was announced that Charter Communications will purchase Time Warner Cable for $55 billion and additionally acquire Bright House Networks, a regional cable company, for $10.4 billion. This deal would create a new cable entity, which we'll refer to as New Charter. So what will New Charter look like? Well, it will be a cable and internet behemoth. It's going to be the second largest cable and internet provider in the nation. It will have 24 million customers and a nationwide footprint. So how does Liberty Broadband play into this? In order to make the acquisition, Charter will partially be financed by Liberty Broadband. Liberty Broadband will invest $5 billion into the deal, and upon completion of the deal, they'll own 19% of New Charter. And again, we have owned Liberty Broadband in anticipation of consolidation in the cable and broadband industry. We published a white paper late last year and wrote a blog on the subject, and both are available at our website. So what do we see in this company, New Charter, and why do we want exposure to it? Well, in our view, there are three catalysts to value. The first is scale. New Charter will be the second largest video and internet provider in the nation. And on the cable side, the key to profitability will be controlling programming costs from the content providers by leveraging scale. Next, enhanced footprint. This slide shows the footprint of New Charter. There's minimal overlapping with improved concentration in certain locations. Charter's picking up nearly 1 million miles of fiber between Bright House and Time Warner Cable. Third, cost savings and tax efficiency. Now, to exemplify this, we have a quote on top here, and it says, "You have leveraged cash flow growth, no taxes, and long-term leverage at low interest rates." It's terrific. And this really exemplifies the playbook for how John Malone created and managed TCI. So let's go through the list here. Content purchasing and operational synergies. We believe New Charter will save $800 million a year on purchasing and synergies. Next, long-term cheap financing. At completion of the deal, New Charter will emerge with 4.5 times EBITDA leverage. But the nature and timing of this deal will provide for cheap long-term financing. And it's important to remember that cable and broadband companies produce very predictable income streams, and that predictable income streams are much more valuable than volatile ones because you can leverage them. Next, we have tax assets. Charter will bring $3 billion in net operating losses into this deal, and you can think of these as a shield against corporate income tax. So altogether, this looks like a recipe for shareholder value creation. In summary, we believe that owning Liberty Broadband is the ideal exposure to a consolidating cable and broadband market, and that ultimately riding this wave will pay off. That concludes our discussion today. Please contact us at info@quantitascapital.com to receive a copy of today's slides or notice of future presentations. Thank you for your support of Quantitas Capital. Good luck and goodbye.